So two of our guys who really like breaking news trades, they missed one of those trades. I asked them to go back and playbook that particular trade, do some research on that particular trade, and then present it to the guys in the room so they were being constructive and proactive about getting better. It's not great to miss trades. Then you got to take the next step about doing the things that work so that you don't miss those trades the next time. At the end of this video, I'm going to give you 3 things that you can do when you miss a trade that will improve your trading. Hi, I'm Mike Bellafiore, Managing Partner of SMV Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the trading videos that we're producing for you in the trading community. If you want to learn 3 real-world setups that our traders use, including the simple strategy that we teach all of our traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window, so don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Alrighty, so this is a breaking news play on a shipping and logistics brokerage company for freights. Basically, the premise here is that so CHRW, it's an integrated shipping and logistics company. Vast majority of their revenue is coming from freight brokerage. Basically, a little description of freight brokerage there. But the big news is that Amazon announced the launch of their digital freight brokerage and logistics platform, FreightWaves. So every time Amazon enters someone else's space, it's like never a good sign for them. And they basically
we don't want to say every time.
Well, not every time.
There's a history that we're going to talk about where when Amazon enters a particular space, it can cause disruption, and it could cause stocks in that sector to really sell off. Is that fair?
Correct. Yeah. And basically, the premise here is that they already have a huge shipping platform, a crazy amount of characters, and they're already doing so much business in this area that they're turning their a cost right now for them, and they're turning that into a revenue. And at the same time, they're undercutting the rest of the market by 26 to 33%. So just destroying everybody's margins, basically. Drawing as much business as they can from other people and then start upcharging them. So basically they've been doing that in a lot of areas, and this is just another example of that.
Yeah, and how did you feel about the fact that they were going to be undercutting prices?
That's a pretty significant margin, and especially for these brokerage companies that really depend on the spreads. That's really going to eat into their profits.
Yeah, so in the past, when there has been a rumor or there's been an announcement that Amazon is going to enter a particular sector or industry, those stocks and the stocks in that sector have had a history of selling off. And one of the things that is surmised is that Amazon will start undercutting on price. Not even that they have decided to undercut on price, just the potential that they will undercut on price. And now here, you have an example where they're saying, we are going to undercut on price. So you guys in this industry are going to make less money, or you're going to have to figure out how to compete with us. All right, so that is a huge distinction with this hit to the marketplace than we've seen in some of the other examples.
Right. Yep. Yeah. Basically, disintermediation is what all this is about. Basically getting rid of the middleman and doing it themselves and expanding. So I
asked you guys to do this. So backstory is, So backstory is you two guys are real interested in breaking news trades and have shown an interest in that. And science suggests that the things you are more naturally interested in, the better you do in them. So I'll talk a little bit more. The recent book I'm reading right now talks about how you learn way better in the things that you're innately interested in than things that come hard to you. And so I think from day one, you guys have sort of naturally gravitated towards that. You've naturally gravitated toward trading the market, which we've had to talk to you on many separate occasions about. And sometimes we've had to create like a rubber room for you on certain days when the market wasn't moving that well. Kidding. But you should notice things like that. We talk about finding your niche. You like to trade low floats, I think. You like to trade large caps on a technical basis. So that's fine to gravitate towards that. There's lots of different ways to trade. And so when you find something that you're naturally interested in and there's a style of trading that matches that, stick with that. There really is science backing up that you're going to learn that information better, faster, and focus on it much better than other people. Okay? So great. And the problem was you guys missed it, and so the point of this exercise is let's be constructive about it, and we'll go back and playbook this trade. The first constructive step is to playbook the trade. And then in playbooking the trade, we said, hey, let's go take a look at the Amazon effect in the past. The reason being it will cement in your mind, internalize in your mind that while there really is a lot of opportunity here when an Amazon headline hits the news. I do want to say one thing about this one particular trade, which I think is, in fairness to you guys, I'm in no way giving you an excuse. We've talked about this. Shouldn't have missed this trade, and that's why we're doing this exercise. But there is a mitigating factor for you guys missing that trade, which is what?
The news wasn't very widespread.
Good, 100%. Yeah, 100%. So the news hit on a particular website that is not widely read. We did hear it over Squawk, but it didn't hit Bloomberg right away. It hit sort of a lesser read website. We did pick it up on the Squawk, but it wasn't a traditional breaking news play where it hits the traditional wires right away and then we react. Okay, so I'll kind of give you that, kind of, but let's go. So what's the Amazon effect? What's some examples of how Amazon has impacted stocks in the past when they've entered their space?
Yeah, so the Amazon effect is basically Amazon coming into a space and undercutting prices that you and Scott just kind of spoke about. So here's some examples of that. On June 16, 2017, Amazon planning to get into the grocery space, and Amazon announced they were going to acquire Whole Foods for $42 a share, and a big deal. And that's kind of what the grocery stocks looked like. Got Kroger, Costco, and Walmart there, and once that news hit the wires, they all took a big hit and drifted lower over a few days, but that's the initial move that you see there. So here's another example.
Let's go back to that chart. So some pretty big down moves there, right?
Yeah.
Okay, good. All right, good. So good research there. What else were you guys looking at?
A few more examples.
So the Roku example, okay.
Yeah, this is one of the most recent ones that set up a really good trade. So it was reported that Amazon had asked advertisers to pledge millions of dollars to support a Roku rival. So
And this sold off, if we actually had a longer term chart, it continued to, it sold off much more over multiple days.
That's the case for a lot of these too. These are just the intraday kind of patterns that we were.
All right, so these are just the intraday charts, but if we looked at multi-day charts, they'd be even more widespread, which shows that there was real selling. Multiple day, big money selling that came in after this news hit the headlines. All right, what else you got?
Amazon announces the purchase of pill packs, so they're getting into the pharmacy space.
Yep.
So that's CVS and
Walgreens.
Walgreens.
Yeah.
So January 30th, 2018, after the market closed, Amazon announces it's going to collaborate with Berkshire Hathaway and JP Morgan to launch a company aimed at cutting healthcare costs. So you can see the shares of healthcare companies, United Health, CVS, and Teva Pharmaceuticals plummeting shortly after.
I never understand, I just have to get this off my chest, I'm sorry. But like, I have never been into a Duane Reade or a CVS where I didn't walk in there and just shake my head that they aren't making so much more money. Have you ever been in a Duane Reade or a CVS where you didn't wait 15 minutes online? I mean, what is the deal with that? Like,
In New York,
they are always crowded.
Yeah.
And you just, how could they possibly not be killing it? It's like every time they have these earnings come out, I'm like, oh, this is going to be the time where they just kill it, because it's just ridiculous in New York.
They have so many stores though in so many places that just.
And they're all full. You would think.
They're not.
You would think
In
that.
the middle of like Fayetteville, Arkansas.
There's a CVS down the block from me, and there's always a line.
That is true. In New York, they're always full, but like in South Carolina, there was never anybody in
I have to say,
CVS.
like half the time
CVS down there.
I actually only go to the ones now where you can actually self-checkout.
Yeah.
And
Duane Reade's far behind in that.
when I walk into the ones that aren't that way, I would say 30% of the time I walk in, I shake my head at myself and I'm like, you are so stupid. Don't you remember that it takes 15 minutes to get in and out of this place? Leave. And I just walk right out. All right, what else do we got? Sorry to interject there.
Yeah, so these are kind of just the intraday fundamentals. Average volume 3.8 million. That was volume on the day. Sorry, average volume is just about 1 million. So our vol was pretty elevated, just under 4. ATR 1.62. Short interest not very high, 7.28%. Really high institutional ownership and a pretty large float. So pretty big large cap company. Here is the this is the daily chart of CHRW. Basically, been kind of sideways for like a little over a year now, and then just the other day on this announcement, we broke under this most recent support there at $84. Here's just another time frame, kind of the big picture of where it's coming from. You can see on the announcement basically collapses and then continues to move down towards $80 from $88.
All right, so the significance of looking at those long-term charts are there people that are long who are underwater who may put some pressure on the stock as well, selling out of their losing positions. That's why you want to go look at your longer-term charts and see, are there going to be extra sellers in here because we're below long-term support levels.
Basically, this is how we would have managed the trade. We were not in the trade, unfortunately, and we should have been, as we talked about. But so we the news hit the tape on most online sources, and the squawk at about 9:50. So there was a really big dislocation between when some people heard the news and when we did. Basically, we dumped right from the open, a little bit before the open, actually. So there must have been some articles being passed around or word on the street about this that caused that first really big collapse. But on news like this, that doesn't mean the opportunity is gone. There's going to be more opportunity in the day to short it as well. But so right around 9:50, we were thinking that we would short one tier as a feeler or a starter position, just to get a feel for how it's trading and basically hold on to that as long as it's staying under VWAP. The plan there would be if it gets above VWAP, consolidates and goes higher, we just want to cut that. It's not behaving quite as well as we'd like and perhaps retracing too far. Then when we come into VWAP and try to test above it at 83, basically we kind of stuff there, continue lower and then consolidate under VWAP. So that's a good indication that there's still a lot of selling pressure here, and we would short another 2 tiers, kind of scaling in as we're rolling over there. After bouncing off of VWAP. We now have a definite risk level on the trade, right above 83.50, which is that previous high there. That's where we want to be at if it gets back above. And basically, we would cover one tier and do the prior low.
The stuff pattern means you get above a significant price, volume increases, you see volume increasing, and then you close below that breakout area. So this is really more of an example of we leak above VWAP and we can't really sustain those prices, but that's a very different pattern than a stuff pattern. The stuff pattern is actually a better pattern.
Not quite a stuff pattern.
We'd have more confirmation to add if we got a stuff pattern. Right. Also, I really like how you're looking at VWAP. You're not sure where to short it. How is it going to react when it comes into VWAP? It's overextended. Let's let it pull back into VWAP. Let's see what it looks like there. That's a good place to be watching. Also, just a general consolidation area would be another, into a pull-in would be another good place to sort of watch. But I don't think a lot of people watch that VWAP area. They're sort of lost. I'm not sure where to look to short something when they think they want to be in it and it's run away from them a little bit. But that's a good job there by you.
So yeah, like we said, by here we would be scaled into tier 3. Our risk would be, really defined here at this point. That's kind of the inflection. And basically, I always think it's a good idea just to cover some risk at the prior low in the case that we bounce and retrace. So we would cover one tier at the prior low at this 82 kind of support area, holding the other two tiers because we're still looking weak. And then right about here, we see a change in the pattern here a bit where we're holding up really cleanly at 81, bounce cleanly right off of it and start making lower highs and grinding up. So here would be another place that you'd want to take off, probably a second tier. And basically, from here, there's a lot of ways you can manage it, but what we were thinking is we just want to leave one tier on in the case that we just keep rolling over as the day goes on. And that way, we still feel comfortable, having a higher price if we want to add later in the day, but essentially holding until the close because we keep grinding lower and grinding lower. But still kind of holding up at this 81 support level so that by the end of the day, you could take it off or, judging by the risk, you could hold it overnight but had earnings the next day, so that was the risk there. So probably not a good overnight hold here, but yeah, that would be the trade management here.
Okay, good. Clean, right?
Yeah.
Doesn't really spend much time above VWAP, kind of leaks above there even though it had such a steep down move. And then when it makes a new low, comes back and really can't trade above the prior low. Right? Can you just highlight that area? Show that prior low. So can't really trade above that prior low area. So pretty clean. Okay, good exercise that you got to do when you're not in something. I should probably yell at you and be mad at you guys, which you should be mad at yourself. But when you miss something, you want to be proactive and constructive about it, and this is something you got to do. So go back to your seats and figure out how to get along that beyond and make up for it. All right, so we're going to give you 3 challenges for this potential opportunity. You can't miss opportunities like this. After you miss an opportunity like this, you have to be constructive and proactive. 3 things that you want to be doing, 3 things that you have to be doing. Challenge number 1. If you miss one good trade, then playbook it. If you miss one of your trades, if it's already in your playbook, then playbook it. See yourself in the trade with your playbook. Be specific. See yourself crushing this trade. Be specific about entries, exits, stops, targets, adds, and risk-off areas. All right? Challenge number 2 is to adopt the winning mindset. Adopt the winning mindset. It's not acceptable to miss one of your best trades. It's not acceptable. You're too good to miss a trade like this. You work too hard. You deserve to win. Challenge number 3. If you miss a good trade, ask why. What can you do so you don't miss one good trade like this again? What filters can you build? What can you do with technology so you don't miss this trade even though it's coming from your squawk? Can you build a filter that's going to catch this? Go back and do that work. What can you change about your prep? What can you do to improve communication with other traders so that they alert you to these opportunities? So is there something you can change about your pre-game routine so you wouldn't have missed it? Should you be talking to your other guys about communicating better on the desk so they inform you of these ideas? Those are the 3 challenges. When you miss a trade, don't sulk, get better. These are ideas to get better. Go ahead and click our subscribe button so you don't miss any of the trading videos that we're producing for you in the trading community. And please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.